The markets have been a roller coaster, and fears of a recession are a big concern for investors. But what does that mean for the rest of us? Joining us now to talk about it in layman's terms is Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. We appreciate you being with us, Craig.
Marie, great to be with you. I'm exhausted after 2 weeks of news.
I'm sure you are, and we appreciate you helping us digest all of it because there's a ton to get through. But I'd like to begin by asking you if you think we are close to a recession.
No.
Okay.
There's a short answer. No, we're not. In the 30 years I've been doing this, I haven't seen a recession materialize when we still have job growth, we still have consumer spending, and we still have positive earnings coming out from corporate America. So a recession is possible, but right now it is not probable.
For the everyday Joe who might have money in a 401k and we're seeing all these dips, all the numbers in red, what would you tell people that they should be thinking about right now, or maybe the action they should be taking?
I think the action everyone should have is pragmatic optimism.
Okay.
Pragmatic optimism. Panic is not a strategy. So if you're investing for your retirement and your retirement is more than 5 years out, stick with the well-laid plan. Same thing goes for college education. But if you're already retired, if for some reason you don't have sufficient safety in your portfolio and cash reserves, when this market bounces, which it should, you might want to raise some additional safety. But this too shall pass.
That's great to hear. How low do you anticipate that markets could go during this time of uncertainty?
Oh, Marie, you just asked the million-dollar question. I think it's so tempting to call a bottom, but here's what I can say. If history's my guide, and it's the only guide I have, markets tend to have this 10 to 14% dip every 12 to 15 months. We were overdue for it. We've gotten that 10% correction engineered. So I think over this week and next, you're going to see the bottom put in. We're very close.
The historical context is really interesting there because I think there's a natural inclination to think this might be all about the tariffs and the trade war, or do you think there's even something else going on to create this drop?
No, I think it's as simple as tariffs, trade war, and tweets. That's all it is. I mean, look at what happened over the last 24 hours. Ontario said that you're going to put a tax on our electricity. We went ahead and said we were going to double the tariff on aluminum and steel. And then as soon as 30 minutes ago, all of those things are gone. So I think it's a little bit of policy chaos, a little bit of news headlines that are making everyone feel worse than the data actually is.
Sure. Finally, Craig, is there something that could happen with the markets in the next week, maybe in a couple weeks, or just some positive sign that we should look for to know that things are maybe stabilizing a bit?
Well, there's three things we need to have in order for stability to come back. Number one, we need to see the rhetoric over trade subside. Number two, we need the House and Senate to do their job, which is pass a continuing resolution and a spending bill. And then part number three, we'll see some of this tomorrow morning. We need to see the signs that inflation is in fact continuing to settle down and not getting worse. And once we get clarity on those three issues, then we'll start following the long-term trend of the economy and the markets, which probably is going to be higher.
Okay, Craig Bolanos, great context and things to look for. We appreciate your perspective.
Great to be with you. Thanks, Marie.
Thanks.